So this lesson is going to be on breaker blocks. We are going to look into bullish breaker block and then bearish breaker block. That is a PDRE metric, so an institutional reference points. When price return to, we can engage our entries or positions. So first of all, we're going to look into a bullish breaker block, and it is formed after price sweeps liquidity below a previous low. So there has to be a previous low, then price sweeps liquidity below that previous low, and after that there should be a break in market structure or a shift in market structure higher. When this happens, we say it signals smart money manipulation below the previous low to then take price higher. So what smart money is doing is they are buying the stops, the sell stops below the low. So the stop losses below that previous low, smart money hunts it and then use it to fuel their buy entries. Okay, now the bullish breaker, we mark it from the last bullish candle that sponsored price down to sweep liquidity below the old low. We're going to go into chart examples and this will be clear. Okay, so entry is going to be from the opening of the breaker and then 50% of the breaker. Let's go into some chart examples. So there's an example of a bullish breaker block. As I said, there should be a previous low, and then that previous low should be hunted by smart money. So they come back down to hunt stop losses below this previous low. After that, they move away aggressively and they shift market structure or break market structure above this high. As soon as there is a run on a previous low like this and a break in market structure here like that, this signifies smart money manipulation below this previous low to then take price higher. So we are going to engage our buy entries from the bullish breaker, and we say that the bullish breaker is the last bullish candle prior to the run on liquidity. This is the last bullish candle prior to the run on this low. Okay, the last bullish candle prior to the run on this low. After we break structure, we box this candle out as our bullish breaker. Now the 50% of that candle is ideal for entry. Okay, let's look at this example. We have a previous low, smart money comes down, take liquidity below that previous low. The sell stops below this low. They hunt it, so the SH is stop hunt. After hunting that stop loss, they accumulate longs. They break structure higher, so that's a shift in market structure. Now this last bullish candle prior to the hunt of stops below this low is your bullish breaker. You box it out, 50% ideal for entry. Boom, smart money buys and accumulate more longs from the breaker. Let's look at the bearish breaker block. Now, if you understood the bullish breaker, this should be much easier because it's the direct opposite of a bullish breaker. So a bearish breaker is formed after price sweeps liquidity above a previous high. So price has to sweep liquidity above a previous high. After the sweep of liquidity above that previous high, it should break structure lower. Now, when that happens, we say smart money has manipulated the stop losses or the buy stops above that previous high to then take price lower. So smart money sells buy stops above the high. So the stop losses above that previous high, smart money use it to sell lower. The bearish breaker is marked by the last bearish candle that sponsored price to sweep liquidity above the old high. Okay, so prior to the run of that high, the last bearish candle that sponsored price to sweep liquidity above that previous high is your bearish breaker. We're gonna look into it soon in chart examples. For your entries, it can come off from the opening or the 50% of the breaker. So this is a chart example of a bearish breaker. We have a previous high here. Smart money sweeps liquidity above that previous high, so there is a stop hunt. Okay, smart money hunts liquidity above previous high and shorts price lower. So after Hunting liquidity above this previous high, they sell aggressively lower, breaking market structure or shifting market structure. Now your bearish breaker is the last bearish candle that sponsored price up to take liquidity. Now, when the liquidity has been taken and we break market structure, the last bearish candle prior to the stop hunt is your bearish breaker. You box it out, 50% is ideal for entry. Smart money returns into it and sell off. They return into it one more time and sell off. Let's look at this example as well. Previous high, smart money hunts liquidity above that previous high. And after that, they sell short to take price lower. So there is a break in market structure or shift in market structure below this low. After the stop hunt and the break in market structure, we look for the last bullish candle prior to the run on stops. So this is the last bearish candle. Okay, the last bearish candle that sponsored price to take liquidity above the side. You box that candle out, 50% when returned to is good for entry. It returns to it here, sell off, returns to it here, and sell off aggressively. So this will be it for breaker blocks. We are always going to box it out from the last candle that sponsored price to take liquidity. Okay, and what you are going to look for is a stop hunt. After the stop hunt, you look for a break in market structure. After the break in market structure, you look for the candle that sponsored price, the last candle that sponsored price to take liquidity. You box it out, and that will be your entry point, either 50% of the breaker or the opening of the breaker. So go into all data, look for breaker blocks and how price reacts from them.